everybody. My name's Aman. I'm from Finch Capital. I'll go through this quickly because I think I want to talk a little bit about kind of how we think about investing and what areas we're investing in, then kind of just giving you a quick background on us. But quickly, we're an early stage venture firm. We focus on kind of late seed, Series A. The letters don't mean much these days, but in general, we kind of look to deploy anything from kind of $500,000 up to 5 million, depending on where the company is. We focus on Europe primarily, and we also kind of spend some time in Southeast Asia, primarily Singapore and Indonesia, where we focus on more kind of consumer opportunities. We are a team of about 9 people. We have 4 advisors. We've made now 22 investments. This number's a little bit old. We used to be called Orange Growth Capital, for some people who might know, but we rebranded to Finch for reasons I can go into later, but primarily we didn't want to be associated with the Orange Telecom company. And yeah, so we're now kind of investing out of our second fund. It's a €100 million fund. The first fund was about a €35 million fund. So kind of what is financial services? And I think kind of I always like to put this into perspective. So the way we think about it is really in 2 buckets. So the first bucket is kind of players in the kind of marketplace software business that are solving big financial pain points. So these can be either consumer companies, these can be lending companies, these can be software companies selling into SMEs, tax software, whatever you want to call it. But we think about it as solving big financial pain points. The second bucket is typically companies that sell into financial institutions, and they're not necessarily solving a financial pain point, but their customers are primarily financial institutions. We also kind of consider real estate an important kind of vertical within the financial services landscape, and obviously insurance as well. So as you can see, we've made kind of now 22 investments. In Zurich itself, we're investors in Square, which is an AI company out here. We're also investors in an insurance platform called Knip, which became Digital Insurance Group. And the last 2 investments that we've done in the last 2 weeks, a company called Goodlord in the rental space in the UK, and a company called Perfops, actually a more deep tech play based in Poland. So yeah, really quickly, I went through this. You know, we are minority shareholders, so we don't take a majority stake. We like to back the management. That's a very crucial element for us. We like to know who we're backing. We like to take a board seat, an active role in the company itself. And the way I kind of think about, you know, a lot of people ask me what is kind of the minimum product revenue threshold that I need to be to kind of qualify. I would say if you want me to put a number on it, we very rarely back companies that are making more than $1 million annually. But I think it's very important for us to get a sense of, you know, is this kind of business model, are the unit economics kind of working? That's the most important thing as opposed to kind of the revenue number. This is the team really quickly. As you can see, we've come from different places. I've spent some time at Facebook, Excel, Credit Suisse. A couple of my colleagues at McKinsey ran the financial practices there. We have a good team of advisors, people from kind of different parts of the industry. So the CEO of ING Direct, which is Dick, to Raymond, who was founders of one of the biggest trading companies called Flow Traders in Europe. So kind of every year we kind of do these FinCircle events for people in our network. So I thought I'll kind of give you a sense of how we think about the space, because we are fairly thesis-driven. So I think this was just a kind of interesting analogy in terms of, you know, Europe is probably the most interesting market in terms of, you know, FinTech, so to say, the fastest growing in particular. And we're seeing kind of now a lot of the funding through these charts being driven by larger and larger rounds compared to maybe the US or Southeast Asia. And this was kind of interesting. I kind of go back into our database to kind of see what are the kind of types of companies we're seeing and how that kind of evolves from quarter to quarter. So this was kind of last year. So you could see a lot in compliance. Everyone was just focused on GDPR. So we actually saw a lot of companies in our database in the GDPR space. And that kind of today is obviously that legislation has come into play. So we see less of that being focused now. We still see a lot in payments and insurance. I think the one area that probably didn't exist here is PropTech. And that's kind of one thing we're actually spending a lot more time on. In terms of kind of geography-wise, I would say kind of been fairly similar. We continue obviously to see a lot from the UK, but kind of as a percentage, that's kind of going down. We obviously ramped up our focus in Southeast Asia, so that kind of distorts the numbers a little bit. But overall, I think it's quite interesting to see these ebbs and flows in terms of the types of companies based on kind of the market conditions. So we're a Dutch-based fund, and being Dutch-based, we often sorry, I skipped a slide, but I'll go here. We often get asked the question like, where's the next Adyen coming from, which is kind of the big payments company. And so this is kind of our standard answer to a lot of people. So I think for those of you who've followed financial services, the payments category is probably kind of the most interesting in terms of kind of exit and M&A. I think if you take any industry, payments has probably seen the most value creation ever. So it's quite interesting. I'll move over here so you can see. But if you compare it to all these players here, Adyen's still extremely small in terms of revenue generated. They process billions and billions of dollars. And what we've kind of learned with this is in the payment space, you actually kind of need a lot of patience. You often don't know what the solution is that they're solving until they kind of find their sweet spot and start processing billions of dollars, because every margin really matters. So yeah, as you can see, they're growing fantastically, but at the same time, they have a lot of work to do to catch up over here. And the reason why people are also interested in the payment space is if you look at kind of the M&A multiples, payments are probably one of the highest in that kind of category. So these are kind of all the financial services multiples that we try and track sometimes. Real estate, obviously, and also relates to kind of why we're seeing a lot more interest in PropTech is because generally people are paying higher multiples for these kind of businesses. The other thing kind of we do every year is we put out these predictions, and we're often wrong, as a lot of venture capitalists are. But we like to kind of go back in hindsight and kind of figure out what we got right and what we got wrong. You can go to our website and download a copy, not a problem. But I thought I'll kind of, just to end, give you a brief idea of what we said we thought would happen in 2017, where we got it wrong, and then kind of what we think is going to happen in 2018. So one of the big things was we thought, kind of B2B would, again, this is in the financial services space, so B2B would beat B2C. And in theory, I think what we've realized is it's actually still as hard to win B2B, primarily because the sales cycles, particularly for an early stage company, are extremely long. So I think the later stage you go, the procurement departments at banks and so on feel more comfortable you're going to be around. So they kind of take you through that process a lot quicker. But for earlier stage, you just need a lot more capital initially to win at B2B. But at the same time, we've seen a lot of successful B2C companies. So if you take, out of the UK, Revolut, Monzo, these companies spend nothing on marketing, maybe initially to start up with, but today Revolut spends literally $0 on marketing, which is kind of a fantastic model. Quickly on blockchain, so I think, again, another buzzword that's been thrown around. Our thesis on the blockchain space is, at least in financial services, it will be kind of fairly consortium driven. So it will be a group of banks or collective companies that at least kind of get this kick-started, and makes it harder for a startup to break into that market. There are some companies that obviously don't necessarily fit that mold, but that's generally the way we think about it, and I think we got that right. Seen a lot of stuff in the SME banking space. I think some really good successes, Conto in France, Tide, Revolut, also now Monzo in the UK. In the AI space, kind of what's interesting is maybe 2 years back, what we saw was more of a platform approach. So, companies would be going to a financial institution and saying, hey, this is our AI platform. Get your data scientists working on it. You have the data set. Kind of do it yourself. What we're seeing, or what we think we saw in 2017, and we believe it's true, is a little bit more sophisticated, productized approach to AI. So what is kind of, just take the AI word out of it, but what is kind of the real product that you have that you want to sell into the financial institution? Lending is an interesting one. I think our theory around lending is, at least from an early stage investor standpoint, you do need a balance sheet eventually to be able to kind of get to those growth rates and build a very big company. So it becomes a little bit harder in terms of differentiation as you grow along. So you have to think about a little bit more innovative ways to structure your balance sheet. And then kind of finally, kind of insurance. We were investors in a business called Kinep over here. We realized it's a very, very hard space to do kind of from a consumer perspective. So you saw a lot of brokerages coming up. And we think kind of that changed in 2017, where you have, again, specific maybe software solutions targeting different value chains in insurance, be it fraud, be it cash settlement, be it claims, and so on. And finally, kind of, we see a lot of activity, particularly in Indonesia. I think a lot of money from China, particular, coming in, as that's a 300 million market that is fairly underbanked. We just kind of sold our first investment company called Sermati over there very, very quickly. It was essentially a price comparison site. And so a lot of the stuff that happened in Europe maybe 10, 15 years ago is happening on the consumer side in Indonesia in particular. And then finally, kind of 2018, who knows? We'll find out whether we'll be right or wrong. But in the payment space, we're spending a lot more time on kind of the B2B payments infrastructure space. How do businesses pay cross-border? Is SWIFT really kind of the way to go for the future? Kind of still focused on the SME banking vertical. So, you have solutions like expense management solutions. How do I manage spend across the company, and so on? How do I manage invoices? How do I lend? So in terms of the security space, what we believe is now that there are many security solutions out there, and actually banks continue and will continue to have massive security budgets, and hence will always kind of silo parts of their infrastructure to try these security solutions out. That doesn't mean they're necessarily good. So we believe there's more of a kind of platform approach coming up here, where there is the ability for customers to try and interact with different vendors. And then, AI, I think kind of this is more what I was talking about before, more a product solution in these three categories, so expenses, procurement, and marketing. And then on the customer acquisition side, I think what we've really seen in the last year, and maybe this is more market-driven, but TV in particular is coming back in terms of building a brand, which is becoming very important. So performance marketing channels like Facebook, Google are getting crowded out, but people are moving their dollars that they're raising to TV to actually build that brand, and are doing it pretty successfully. And then on the kind of pure infrastructure investment side, we think that will be challenging in Europe. I think unless you raise a lot of money very early on, this is a very, very tough play, particularly because, again, financial institutions don't want to let early stage companies into their infrastructure without knowing that they will be around for a long time. And then, yeah, we see a lot of activity in Poland and Spain, surprisingly. I think one of the major reasons for this is, there's a general lack of, or not lack, I would say, a problem in hiring in some of the key markets, particularly the UK. But I think even if you look at the Netherlands, lots of attrition. And so people are looking at these countries as not only kind of where do I build my company next, but I think you have people who kind of build deep tech solutions, need to be surrounded by talent and feel that they can get that and have a competitive advantage in these locations. So yeah, that's it.